If you've ever typed "how much can I afford" into a Google, Bing, Chrome, Safari search and closed the tab more confused than when you opened it, this video's for you. I'm going to give you the exact formula lenders use, explain it in plain English, and by the end of this video, you're gonna know exactly where you stand. Here's the thing, most people don't know, banks do not just look at your income and guess. They run actual math. There's a specific formula, and once you understand it, the whole thing stops being scary. I had a client one time. She was a nurse, 2 kids, married, renting for 9 years. She told me she was afraid to even apply because she thought she didn't make enough money. We ran her numbers. She qualified for more than she expected. She closed 4 months later. You see, that story's not unique. It happens more often than you think. So let me show you what she learned. Lenders do not lend with your income. They lend with your DTI. That stands for debt to income ratio. And it's the most important number in your mortgage application. Here's how it works. Take all of your monthly debt payments, your car payment, student loans, credit cards, anything you owe each month, and add them up. Then take your gross monthly income. That is your income before taxes and insurance come out. Divide your debts by your income and then multiply by 100, and that is your DTI. Let me give you a real example. Say you bring home $5,000 a month before taxes. You have a $400 car payment, a $200 student loan payment, and you put $100 a month on a credit card. That's $700 in monthly debts. 700 divided by 5,000 is 14%. That is a very healthy debt to income ratio. Most lenders want to see your DTI at 43% or lower. Some programs allow for higher. Now, lenders also look at something called your front-end ratio. That's just your future housing costs compared to your income. They want that number to land somewhere around 28 to 31%. Using that same example, $5,000 a month in income, 28% of that is $14,000. So your target monthly mortgage payment, including taxes and insurance, should be somewhere in that range. Now hear me out. These are guidelines, not hard rules. I've gotten clients approved at higher ratios with strong compensating factors, such as good savings, stable job history, strong credit. The formula gives you a starting point, not a ceiling. One of the biggest mistakes I see first-time homebuyers make is assuming their mortgage payment is just the loan. It's not. Your payment includes 4 things. We call it PITI, P-I-T-I. The P stands for principal. That's the part that pays down your loan balance. Interest. That is the cost of borrowing. Taxes, property taxes, which vary by county, township, parish, and state, and then insurance. Your homeowner's insurance premium, sometimes, if you put less than 20% down, you may also have PMI, and that stands for private mortgage insurance. Now, I bring this up because I've seen people run online calculators, see a payment, and think this is the full picture. It's not. When I run your numbers, we account for all of it. Here's something that changes everything: your interest rate. Most people focus on home price, but the rate is what determines what your actual payment will be. On a $300,000 home loan, the difference between a 6.5% and a 7.5% rate is roughly $1,080 a month. Over 30 years, that's $64,000. That is not a small number. This is why your credit scores matter more than people realize. A higher score can mean a lower rate, and a lower rate means you can afford more home or keep more money in your pocket each month. Let me put this all together with a real-world example. A family coming to me earning $6,000 a month combined. They have a car payment of $350, a student loan of $200 a month, and then no other debts. Their total monthly debt is $550. Their DTI without a mortgage is about 9%. That gives them a lot of room. With a target total DTI of 43%, they have room for a mortgage payment of around $2,100 a month, and that's including the taxes and insurance. At current rates, a $2,100 all-in payment could get them into a house in the $250,000 to $280,000 range, depending on their tax rate and where they're buying. This is a real home in a lot of markets. 3 mistakes I see all the time. Number 1, using take-home pay instead of gross income. Lenders use your income before taxes. If you calculate your debt-to-income ratio using your net pay, you will think you qualify for less than you actually do. Mistake number 2, forgetting about taxes and insurance in the payment estimate. People see a principal and interest payment online, fall in love with the number, then get surprised at closing, always ask for the full payment. Mistake number 3, not accounting for your credit score before you apply. Your score affects your rate affects your payment affects how much you qualify for, and those things are all connected. I want to clear up 2 things I hear all the time. The first myth is this: you need to make a lot of money to qualify for a home. That is not how it works. Lenders care about the ratio, not the raw number. I have helped borrowers earning $38,000 a year close on a home. It's all about what you owe relative to what you earn. The second myth is if you cannot afford a $300,000 home, you cannot buy. That is just not true. There are homes at lower price points. There are programs that can help. There is a real number that works for your situation. My job is to help you find it. Here is what I want you to walk away with today. Number 1, your DTI is the number that drives everything. Keep it under 43%. Number 2, your payment includes taxes and insurance, not just the loan. Number 3, your interest rate and your credit score are connected, so do not ignore your credit. And number 4, your number might be better than you think. If you want to know your actual number, not an estimate from a calculator, but a real conversation based on your real income and real debt, that's exactly what a consultation is for. The link is in the description below. It takes about 10 minutes to get on the phone, no pressure, just clarity. And sometimes clarity is the one thing standing between you and a home. If you're ready to take the next step and find out where you are as it pertains to your readiness to achieve your goal of home ownership, I would love to have a conversation with you. Why? I'm a lender. My NMLS license number is 180100, and my contact information is pinned in the top comment and in the description of this video. My time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. Watch these next 2 videos here. They'll help you in your education as you prepare to become a homeowner and achieve your goals. And for the rest of you, indeed, y'all stay blessed.